A very good evening to everyone. My name is Cindy and I'm the Executive Director for CFA Society Malaysia. A very warm welcome to all of you. I know everyone is eager to hear from our distinguished guest speaker for today's masterclass session, what's next for Malaysia's digital banking landscape. But I would like to quickly touch on the housekeeping part. Today's session will take about an hour, where 45 minutes will be presentation, followed by the Q's and A's in the last 10 to 15 minutes. We have created a QR code, as you can see on your screen, for the Q&A session, where you can type all the questions you want to ask our guest speaker for today. You can also key in the link that is available on the screen for this. Please ensure your mics are on mute throughout the session. This will be a recorded session and hence the recording will be made available at CFA Society Malaysia's YouTube channel. Now the part where all of you are waiting for. It gives me great pleasure for me to introduce to all of you our distinguished guest speaker, Yang Mulia Rajate Maimuna, Managing Director, Wholesale Banking of AmBank Group. With over 25 years of financial services experience, covering Islamic, investment banking, wholesale and digital banking. We would like to thank you, Rajate, for your time today from your very busy schedule to give us an insight into the future of digital banking in Malaysia and how we are poised to face the challenges, including how financial institutions will need to up the game beyond strategy statements. In today's session as well, we have as moderator, Ms. Huang Pek Ling, CFA, Honorary Secretary for CFA Society Malaysia. She's also the head of Group Non-Traded Market Risk at Maybank. Over to you, Pek Ling.
Good evening, everyone. And once again, thank you, Rajate, for making time for us to speak to all our members. So let's, without further ado, let's start. And I'd like to start with recognizing you as one of the pioneers in fronting digitalization in the banking industry, especially in Malaysia. So tell us, I'm sure you've got lots to share. Perhaps you can start with the sharing of the evolution and also the state of our digital banking in Malaysia. Over to you, Rajate.
Hey, thanks, Pek Ling, and hello, everybody. So I can see those who signed in at 6 p.m. are those who really want to know how the world is evolving. And I hope, since you guys are all smart cookies here, right? Otherwise, you wouldn't be attempting the CFA. So those attempting the CFA, I thought I'd share with you, you've been hearing so much about this digital banking, and it didn't quite just pop up a year or two ago. Like Pek Ling said, a few of us have been huge proponents of this industry, and we've been pushing for the last decade. But truly, the whole, the speed of it, you're really seeing the changes just a year from now. Okay, let me just share with you what I've got. Hang on, yeah. Okay, you guys can see? Good?
Yes, all good.
Yeah, okay. All right. So I would think, I'm not quite sure, Pek Ling, what the average age is of those people in this call today. But if you haven't already embraced digital adoption, you're literally very, very late. Late, I wanted to say loser, but I thought I'd be kind and say late. Because you, just looking at how fast things have moved from 10 years ago to where we are today, I'm just gonna. Sorry. Okay. All right. So this is how much things are grown. How, just 10 years ago, we had like 4.5 billion connecting things on the IoT, and now we have 6 times that. So the growth is just phenomenal, right? In just 6 years. So I started dabbling in digital banking back in 2011. Back then, we, already the amount of data that's been collected, the amount of space and speed of things was tremendous. But look at where we are today. So today we have more mobile connections than we have people on the planet. Okay, so that's 10.97 billion people, mobile connections. And the average broadband speed has actually grown as well. So in Malaysia, they say that we are 107 megabits per second. So the average broadband in the world, we seem to be not very far, although there is a divide between rural and urban, but that's something to discuss on another day. But with that comes speed, right? So we have huge number of mobile connections. We now have speed, and this is the number of swipes and taps per day that you and I, the average of the you and I, do. Although we tell ourselves we mustn't look at our phones too much, but we do, not just our phones, our mobile devices. So that there is no other single thing that we do in our lives, on our daily lives, that we do that much with our connection to our mobile devices. 2,600 average per user. That's a lot. And with that, what you and I have seen is how businesses have metamorphosized, meaning that while we still do the same things, we eat, we watch movies, we travel, the way it's been delivered to us, the channels that it has been delivered to us have changed tremendously. So you and I still hail a cab, but we don't do it like the way we used to do it, literally with our hands out. So you have the Uber, you have the Grab, and everything else that we're familiar with. It's just the channels and the delivery has changed so much. I mean, if you look at today's business models, again, look at the Grabs of the world, they don't own a single taxi. Look at Airbnb, they don't own a single hotel, but they are the largest hotelier in the world today. And similarly, movies, right? The biggest cinema is Netflix today, and they don't have a single, physical theater. As with retail, as with travel agent, I don't know who else uses a travel agent in the corner store. Everyone's booking through booking.com or Agoda and everything else, right? So our delivery or the business model has changed a tremendous lot, but to fulfill things that we've always been familiar with. And let's look at commerce. I guess after the lockdown, a lot of everyone, we couldn't go out. So we learned, those who had never grabbed things before, who had never bought anything from Shopee before, learned how to use e-commerce. Everyone had to. And if you look at the sheer size, I share with you, Alibaba's astounding numbers. When Singles Day and Alibaba in 2011, the platform drew short of $1 billion, 800 million worth of goods traded. In 2021, the last Singles Day was over 84 billion US dollars. That's bigger than the GDP of many, many countries. And this is on a single day, I remember this day as being, the last 2 years being particularly difficult for us as banks, because we had to carry the sheer volume of transactions. But look at that whole behavior change. I mean, it was growing up nicely. It was doing about 25 and 30. And then came 2020 when everyone was in lockdown globally. In the last 2 years, it had just grown. But what we're seeing now is, despite borders opening up, you can go out and do stuff, you can go and shop physically. That behavior has been etched in people, especially those who are not familiar in doing online shopping, or not comfortable, or feeling distrusting. They have learned to trust the system, and they have learned to be comfortable with the system, and which means that this is the way it's just going to go bigger and bigger, right? So one day you probably have physical stores just for you to try on stuff, and then you probably still make your purchases online. Okay, so we've seen the change and innovation and evolution of movie watching, shopping, traveling. What about banking, right? So how has banking evolved? So It wasn't so rapid because I don't know whether you know this, the first bank, the first still living bank. So this bank in Italy still exists today, 1472. So they're the first modern type of bank that you see today, and they still exist. Nothing had changed for 600 years until 1967, meaning that banking had remained in the same way, counter, physical, everything for 600 years until 1967, when Barclays introduced the first ATM. So from 1987, so that was innovation in itself for many people who are particularly skeptical or cynical, or who say that banks have not evolved very much. I must say that innovation has started in the banks perhaps way before some of the other industries. So it started with the ATM. And then there was no such thing as home banking until 1981, when Chase Bank in the US introduced home banking, which means that you could phone and do stuff from where you are. You don't have to walk into a bank branch. So this was in 1981, a long, long time before many of you were born. And then in 1995, 14 years later, Wells Fargo introduced the opening of online current and savings account. So up to that point in time, you could do stuff, but you still needed to walk into a bank branch to open an account. But Wells Fargo introduced this in 1995, which is literally 27 years ago, where you could actually open an account online. So you may not experience it here, but that innovation had already, it had already been innovated in 1995. Beyond that, so then that was 1995, that was Wells Fargo. Then, fast forward to where we are today. There are huge industry game changes, in particular for those of you who have studied abroad. If you studied in the UK, you would be familiar with some of the names that I'm going to mention here. So Revolut is what they call a challenger bank in the UK. So again, it was a startup. It has no branches, and you can only interact or engage with Revolut only via your mobile phone. And then there is Monzo. I know many young Malaysians studying in the UK who have found it very difficult to open bank accounts with, the high street banks. And they all bank with Monzo because, again, you need not go anywhere to open an account with Monzo. You need only to download the app. And then they'll do a few challenge questions, and then they have a way to authenticate you. And there you go, you are already a customer of a bank. And with Monzo, you can do stuff that, the other banks can do here, your Maybank, your CIMB, you can do all of those stuff. You get a card, you can transfer money, all the things that I guess you need in a bank. And then you may have heard of Kakao Bank. So this is South Korean. I put Kakao Bank because I know there are a number of Korean fans. And Kakao Bank is extremely successful because they started out as a wallet. So when they got their banking license, what they did was they converted their wallet into savings accounts. So essentially, the claim of 240,000 customers in the first 24 hours of operations were largely banking on their existing wallet customers and just converting them into their bank customers. I've also mentioned Cabbage here. I'm a big fan of Cabbage because they were very, very early adopters. Of course, there have been other fintech lenders who possibly may have done more innovating stuff or more exciting stuff. But Cabbage started out in 2011 as a pioneer in fintech lending for micro SMEs. So essentially, if you have a small business, say you buy and sell stuff, and your primary marketing tool is Instagram, and so you your customers make payments through PayPal. So through that PayPal collection, what Cabbage does is it builds data. It collects the data of your customers, like how many customers you have, how much you have been collecting, the kind of data flow or cash flow that you have. And they lend to these micro SMEs against these data. And because they don't have any bank branches, so for the micro SMEs, when they want to borrow, the money is actually pushed through a PayPal account as well. So that was really smart because Cabbage doesn't own PayPal. It literally uses someone else's platform to distribute. So that was their channel. They don't need a branch. They didn't even build their own distribution platform. They just used someone else's platform. Okay. And then moving from there, I also wanted to share with you, because these are digital banks. I mean, those that I mentioned before were digital banks and fintech lenders. Well, what to me, the true innovators and true disruptors were the mobile telephone companies or the telcos. So some of you may have heard of M-Pesa. How many of you have heard of M-Pesa? I hope you have, because M-Pesa was truly a game changer. M-Pesa is actually Vodafone's, I could say, de facto bank. It behaves like a bank. It is not a bank. It started out as just a telco, like your Hotlink or your Celcom, providing prepaid mobile. But using that prepaid mobile, they started using that whole prepaid account to do many other things, like, or you could start saving money. You could put money into your prepaid account and treat that like a deposit. You can then transfer money to someone else using that prepaid account. So I can transfer to Peckling and Peckling can transfer to me as long as we both have this M-Pesa prepaid account. So what started out incidentally became Kenya's key conduit to banking Kenyans, because at that point in time, Kenya had something like, 3 to 5% of its total population that actually had a bank account. But today, because of M-Pesa, Kenya has 75% of its population being banked. It's actually highest in Africa. And because of that, is a direct correlation of the ability to the ability to access to funding, the ability to move money. Its economy is way ahead of the others. And it was just a mobile phone, and it's actually owned by Vodafone. It's not actually, and Safari.com. It's not owned by any other bank. Another one is EasyPesa, similar to M-Pesa. This was in Pakistan. Owned by Telenor. So as you know, if you may know, Telenor is the holding company of DG, of our DG. So EasyPesa introduced something truly revolutionary in Pakistan. I mean, before that, Pakistan, just like Malaysia, if you want to open a bank account, you have to walk into a bank branch, and it usually takes a long time. Whereas here, they made it so easy that it literally takes 3 minutes. And then it uses its EasyPesa shops as its branches. So you can deposit, you can withdraw cash, you can pay bills and do pretty much what you can do with your mobile bank. So, and again, incidentally, Telenor's EasyPesa, which is not a bank, is actually Pakistan's third largest bank today. So the sheer force of disruption in the banking industry is phenomenal. It's just phenomenal. And the reason why I thought I'd share with you is very important, because you guys are the future of, our financial industry, to understand that do not ever underestimate the power of disruption, because disruption can come from anywhere. So my competitor tomorrow is not the bank down the street for me. It could be these guys. I mean, it could be telcos. It could be something else tomorrow, right? So today you see the biggest disruptors are telcos, but I will share with you shortly who the ones are going to come and disrupt the banking industry even more. Okay, so that takes us to where we are today here in Malaysia. By the way, if you guys have burning questions and if admin sees any burning question, Pei Ling, halfway through, you can just let me know, yeah?
We'll certainly do.
Okay.
Yes. So just so that everyone knows, there's a app which is on top of your chat. There's a link where you can actually go and put your questions. You can even vote on them, and I will ask the questions as being relevant.
Okay. Because you might be curious along the way, and let's make this truly interactive. I would have loved to see you guys in person, but let's just imagine that we're in one small classroom and that we can talk to each other. Okay, so where we are now, exciting times ahead indeed. If you have been paying attention, then you will see how far disruption is going to go, and that's here in Malaysia. Unless you have not been reading the newspapers, which is a really bad thing, you must always read the business sections of the papers. You can skip everything else, but don't skip the business section. Bank Negara has just recently awarded 5 digital banking licenses. This is the most exciting thing ever. And who are they? The first is Boost. So you guys, I would think all you young people in this room would have used Boost before. So Boost is an early wallet developer owned by Axiata. And Axiata, Celcom is part of the Axiata group. And it was launched in 2017, essentially providing another way for you to make payments. So at that time, the national QR, the Do It Now QR hadn't been launched yet. So Boost had its own proprietary QR and introduced Malaysia's first fully digital mobile wallet. And they have been granted a license. Next fellow is Shopee. So I cannot imagine that any of you hadn't been shopping on Shopee. I probably have done too much of it, or still am doing a little too much of it. But Shopee is in a consortium with YTL. And as you know, YTL has got very deep pockets, and so has Shopee. So most importantly is the shared network that Shopee has. And then Grab. Who has not grabbed? I mean, you grab everything these days. You grab food, hail rides, sending stuff to each other. It is a household thing. I would think that you use more of your Grab app than you would your mobile banking app, right? So, yeah, next guy. And then there's Aeon. For those of you who know, Aeon has got two distinct businesses. One is the retail mall, Aeon Supermarket, essentially. And another is they do lending. They do lending for the other country's largest motorcycle lender. So if you want to buy a motorbike, banks don't lend to you to buy motorcycles, but Aeon does. And as you know, they have 64 malls, and they're a household name. And next is Qasem. Qasem is in a joint venture with CAF, and they are really a used car marketplace. If you had purchased a used car, you would be familiar. So from where the many slides ago, I was talking about, the telcos being the primary disruptors, and you have the fintech lenders that's disrupting the industry. Here in Malaysia, you are going to witness, something truly phenomenal here.
Yeah. So maybe I can. Oh, sorry.
No, go ahead. No, go ahead.
Yeah.
Go ahead.
So it just baffles me, right? Like what you mentioned, to see these names. I mean, I've been in the banking industry for 20 years, and everyone says the sunset industry. So perhaps I have to snag a job in one of these? Because looking at the name, none of these are banks, right? They are like what you mentioned, e-wallets, online platforms, Grab, right? 10 years ago, I wouldn't have known like what Grab is. So what's in it for them? And why did they even apply for this license? Because what are they aiming to do?
Okay, lucky for you, they're all my clients, so I can share with you a little bit of the insight thinking behind it. Well, if you're Boost, right, and you have 9.6 million customers and you always have balances on the wallet, and right now all your customer can do is just make payments. So wouldn't it be great if your customers can also start using the wallet to pay, to do other things, to transfer money, to remit, to keep money, get paid a little bit of profits and interest, invest. So essentially what all of these five want is that for customers to use them more than what they're currently doing, because they kind of figured out, 9.6 million customers is more than most what banks have as CASA customers, okay? And then if you look at Shopee, you get the kind of visitors that no banks get per month. You don't get that kind of people visiting your. So they got smart. I can do more with the customer base that I have. I can make more money than just doing one thing. If, for instance, say Grab, right? You now have a Grab app. You can do everything now except for save money, remit money, invest, or pay your friends. But the moment Grab becomes a bank, how much more compelling it is for an individual to then eventually use Grab as their operating account, because I can do a lot more. What can you do with a mobile banking app other than paying money and do a little bit of investment and transmitting money? You cannot buy things from a supermarket. You cannot, buy a movie ticket. So all these, if you look at the Boost app, they have movie tickets, right? And then like Aeon, they've got supermarkets. You can buy stuff because Aeon also has a wallet, and Aeon's wallet also gives you a loyalty program. Each time you buy, I don't know, cabbage or stuff, then they give you a loyalty program. You don't get that with our regular banking app. So coming to your point was, they figured out that they could be a major disruptor to the retail landscape and to the micro SMEs. Why? Because this is the mandate that Bank Negara had actually given them. The mandate is to serve the underserved. Every time I say this, I would have a lot of people saying this stuff like, what do you mean? Everyone in Malaysia has got a bank account, which is true, everyone. But what do you do with your bank account? Some of you, the B40s in particular, can only keep money and withdraw money. Can they borrow money? No, because they're not credit worthy. Can they do anything else? No, because if you have $10 balance in your account, no one's really going to spend time on you. And the thing about Malaysia is we always forget everybody has got a bank account. But if you're a micro entrepreneur, you don't do anything with your bank account except for keep money and pay your suppliers, collect money from your customer and pay your suppliers. But none of the banks have been able to crack that secret code as to how do we enable these micro entrepreneurs? Because the first thing a bank would ask when you come into a bank would be, please share with me your financial statement. So if you run a food truck, I don't think you would have any financial statement. So what's the next thing we will ask you? Okay, have you got any collateral to give us? Have you got any property? What about your mother's house, right? So that's not what the fintech lenders have been doing. So let's go back to cabbage and the many, many cabbages after that. They don't look at all. They don't, ask for collateral. They don't ask for your financial statements. They build your credit score using other data. So they consume data from various APIs. So they consume, say, Pei Ling wants to borrow money. So I consume APIs that will show how does Pei Ling pay her tenaga bills? Does she pay on the dot or does she wait before her electricity is being cut? Does she pay her electricity, her mobile phones on the dot or not? That builds, to a certain extent, the kind of credit score to an individual. So to a micro entrepreneur, we could help build the cash flow looking at just data of how much they collect from the customers, how much they pay their suppliers, how they, essentially you can build a cash flow and build an alternative credit scoring machine using data, alternative data, which existingly the high street banks around the world, not just saying about Malaysia, just around the world, were just not designed to do that. And the technology behind the large banks also are not designed to do that, because we have huge core banking systems, expensive and largely not very agile. For those of you who work in IT would know what I'm saying, that every time you want to do something big, you're given windows only before you can tweak anything into your core platform. But it's not like that for the digital banks and for the fintech lenders. Everything is light. Everything is building an ecosystem. Everything is about sharing. So, everything's put on the cloud. Core banking systems, they pay as you use other people's system. They literally tumpang other people, like pretty much like what I say, Cabbage, right? Cabbage's distribution platform is PayPal, which is not even theirs. So that's why these guys have gone for it. So the question that you've asked, Pei-Ling, is that rather than just using the wallet, like say for Boost, just so that people, keep maybe balances of 10, 20 bucks, if I can make that wallet a primary account or operating account for my customer, I would get greater balances. And with that, I can start lending. Lending is a very lucrative business, right? So that's why they want to do this. And for us, let's stand from the user space. It's great, right? Now you have all sorts of, you have greater alternatives, possibly cheaper because they're running on a cheaper platform, quicker because they're so technology driven. And the hope is, of course, the mandate is to fill in the gaps. So you're not talking about the corporate banking, investment banking stuff. That would still be the purview of the large banks. But we're talking about the gap. And how big is that gap? If you know that 70% of our GDP is driven by SMEs, you will also know that 70% of that 70% are micro entrepreneurs. And of that 70%, only 22% have got access to funding from banks. So the rest don't. So they can't grow their business because they don't have access to financing and other tools. So they need many other tools, cash management, payroll, and essentially managing micro businesses, even if you have 1 or 2 employees, moving up to 5, moving up to more than that, you need help, right? Okay, so does anybody have any question? I can see some chat here. Okay, somebody doesn't read newspaper. Okay. Okay, so how do they intend to do this? First, their focus will be, and if you are anywhere, Pei-Ling, just in case you plan to apply for a job in any one of this, you must remember that the digital banks and fintech lenders always start with customer experience first, and then they work it back through technology. And that's what Steve Jobs had done with the Apple phone, iPad, dan lain-lain, not the other way around. How us banks have always been doing it. Okay, this is a technology we have, and then we figure out what kind of products we can produce. So banks have always been product driven. I build a product, I sell to you. I have a mortgage, I sell to you. And you don't have any other choice whether you want it or not in any other shape and form, because if you want to buy a house, that's what you have. But the fintech lenders and the digital banks think of it differently. They think about, hey, you want to buy a house. So if you look at some of the digital banks in Australia, for instance, if you want to buy a house, you actually go to the property developer And then together with the banks, they would build a platform that will allow you to interactively view the property that you want and interactively work with fetching, again, APIs like, how much money you have in the bank, how much money you have in your EPF. All that is done at the back. And it would tell you, hey, so-and-so, look, you can afford to buy this at pay how much per month, and all that is done behind. So they're already around the world. We're already seeing some of these digital banks doing stuff like that. So the point is, CX is everything. CX first, and then you work your way around to technology. So when you talk about CX, there are a few things that you have to focus on, right? So how they will do this, and how you will do this, because I'm assuming that most of you are in the financial industry, is if you want to remain relevant, even if you're not moving to a digital bank, even if you're staying in a big old bank, this is what you have to do, because this is where competition comes from the digital banks. The first thing is you have to focus on connectivity. You have to. We say we do, but do we? Truly? Because when you think about it, we can leave anything at home and not get upset except for our phones, because we live with our phones. And so you want all the interactions to come through mobile. First and foremost, please don't ask them to go and walk into a bank branch if they want to open an account. It has to be, everything needs to be able to be fulfilled entirely through the mobile phone. And that is truly connectivity. And then if you have a website, if you have a domain, if you notice how they've been, how these digital economies and businesses have been doing, is they invite you into their domain like you do guests into your home. If you're going to be one of those with the most miserable customer experience on trying to click here, click there, and cannot find your way through, and it's so difficult, and browsing is difficult, and then you go in and then you get kicked out 10 times, you've lost them. We're talking about millennials here. The need for instant response. I come from a generation where I used to have to dial the phone, so I can be a lot patient. Dial 1, dial 2. But the millennials is like, I click, it has to happen. An instant gratification, you know what I mean? You have to give it to me now. So this is another key thing that we have to think about. And the one other thing that the digital banks will be focusing on, and I have seen, and you should Google this, some of pure digital banks and how their interaction with you. If you look at most of the other banks around the world, if you look at their attempt at having a social media interaction with you, it's quite sad, because then they will post on IG or on Twitter, and they will say product FD 4%. Okay, so that's what the general banks around the world would do, but not the digital banks. They don't talk about their products. They talk about experience, about lifestyle. I've watched this New Zealand digital bank, and I was thinking initially it was a whole video about buying coffee, and I wasn't seeing the bank at all. And then I realized what it was trying to do is just saying that, look, you don't get up and say that, okay, today I want to make a banking transaction. You don't do that. You get up and say, I want to buy a pair of shoes. So they enable you by bringing you to what they think you want and just making it possible at the back. So banks have always put ourselves in the forefront. We're quite hubris in this sense, we're quite narcissistic, us. But the new behavior is not that. You can just be by the side. And by the way, if you're not going to make it happen for me, I have other means now. And these are the fintech lenders, right? So the other thing, so connectivity is one, remember this. Number 2 is really using data and advanced analytics. We have so much data in all the banks. In a bank, we have so much data, but we don't know what to do with them. Or because we have so much rubbish also, we don't know how to sanitize them. So decision-making using data is something that we are still learning, but that's what they have essentially perfected. They don't take on unnecessary data. Yeah. So when you look at, internet banking and mobile plugins, right? So you will notice that over time, you will only get, you will be suggested things that you like. Just like, this social enterprise marketing, everything is formulated to you, is very targeted. So whereas before, so I don't know if some of you have been, customers of this mobile bank, these digital banks. Currently, if you go to any banking app, they will have everything, because the same thing is shown to everyone. Whereas with the use of this kind of in-app analytics, they can pop up things that's only relevant to you through your searches, through your browsing history, to what you have been talking, because they also employ social listening tools. You always say that, oh my God, I swear my phone is listening to what I was just talking about. Of course it does. Of course it does. And they buy into this, what they call listening to microblogs, what people say about things and what, right? So everything is extremely targeted. And suddenly you feel, oh, they know me so well. Oh yeah, I have always been wanting to buy that pair of shoes. And that's why when you say, I want to buy, I know my phone was listening to me because I said, I want to buy a particular thing. And it kept showing to me. I was thinking, should I buy the Insta360 X2 phone? And then at every corner, it'll be X2, X2. Why? Right? Because of content management systems. So the use of big data and the ability actually to process that data. Sanitization of data is crucial. And that's the second thing that they will be doing differently than what the traditional banks have been doing. So of course, the third thing, and we're better at this, we have been focusing on straight through processing, STPs. But where we are today is we started with manual and we want to digitize or digitalize, whereas they start from day one, automation. From day one, no branches. From day one, no humans except for the coders. So they don't have salespeople, they don't. Yeah, so digital banks, 50-60% of their workforce would be programmers. So they're very heavy on IT, very heavy on tech. Yeah, every process application at the onset is with full automation, full straight through, and everything is paperless and remote. And with that, it will bring greater customer experience, right? Because right now, if you want to borrow money, if you're a company and you want to borrow money, you have to give us your Form 24, you have to give us your Form 29, 49 in hard copy. Please drop it off at a branch or a business center. So they're not going to be doing that anymore. So from day one, it's going to be, truly just all automated. And then, of course, the last thing is their innovation is at the heart of everything. You cannot tell us that for digital banks, when I speak to fintech lenders, there's no such thing, but we have never done it before. There's no such thing as because we've not done it before, that means we don't know how to do or we cannot do. They behave completely the other way around. It's like, what is it that people haven't done yet? And that's really the core of the whole paradigm shift in thinking between the digital banks and the traditional banks, is they will always think, what? CX first. How do I sit down and I want it to be done this way? How can I do it? Doesn't matter if no one has done it before. Another thing that's a bit unusual for them, they also reach out for crowdfunding. They reach out to outside their capital for funding, which we don't do, again, as traditional banks. And so it allows the public to get even more engaged with the way they run businesses. And it allows P2P, essentially, right? Because particularly in a low interest rate regime, maybe not so relevant to us since, we're on an interest rate hike. But if you're in a low interest rate regime, you're not going to get very much returns on your money. So P2P lending would actually allow you to get greater returns on your money. And then again, coming back to that, everything is through digital-centered business model. So everything starts first from the cloud. Yeah. So there's no such thing as hard servers, nothing. So these are cloud babies. They were born in the cloud. Okay, this is what this guy said to me. We were born in the cloud. I was like, whoa, what does that mean? Right. So it's a very different. And if you're in your 20s, and if you're not from an IT background, and you are already in the financial industry, I am telling you, you must never get caught up in the way we do things. You must learn to reinvent yourself. You must learn to help your institutions to also reinvent themselves. That is the only way that these banks can remain relevant and create a healthy ecosystem. Because currently, how we are like is that if I own a customer, I want to keep that customer. I don't want to share him or her with anyone else. The fintechs don't behave like that. The digital banks don't behave like that. They actually set up a platform and say, okay, I'm good at doing this, you're good at doing that, and you're good at doing something else. So I allow my customer to plug into the ecosystem to have access to everything. That's the point of open banking, which we don't have. So when you have open banking, it doesn't matter. I have an account in Maybank, I have an account in mBank, I have an account in CIMB. I should be able to see all of that, right? Add a single sign-on. And I should be able to say, oh, which fund management company offers better rates for something I want to do this and that. That's what they do. They aggregate. If a good taste is just look at AirAsia's super app for travel. If you go to AirAsia's super app, they don't just tell you AirAsia's flight schedule. You say you want to go here, they will tell everybody. Because when you book through that, they will still make money. That is a very different paradigm shift. Huh? The AirAsia super app is a very different thinking. You can buy your food, you can travel, you can book. But they started out, but they own planes, but they don't think insular, and they don't think about control. So again, we mustn't think about controlling our customers. What you want to do is you want to give your customers options so that if they really like your platform, they will continue to stay with you. Why? Well, pay $5 extra for you to do everything for them, right? So this is really my last slide. And before Pitling and anyone else want to ask a question is, after all that I'm saying, what I'm seeing right now, I think the biggest challenge that we possibly have is managing a multi-generational workforce. Yeah. Because you have all of this. You have the old farts, and then you have the young people. And then the frustration comes sort of somewhere in between, because the old farts are the decision makers, but the innovators are somewhere at the bottom there. We have to find a way. And if there are people in the Gen X and above population in this call, I urge you to be open-minded, to listen to those younger than us. Just because we've been working for 200 years doesn't mean that those kids don't have anything to put on the table for us. And that's the only way I have learned. I have learned so much by listening to how these young people have been doing stuff. But to the Gen Zs and the millennials as well, you must also listen to your forefathers, because unfortunately we have gone through so much pain through compliance, fines, jail term for some people, and all sorts of stuff. So as much as you'd like, product to be time to market within 24 hours, it's not so possible. You have to make sure that you protect, that there has to be a high level of protection of depositors. Why? Because you are managing other people's money. When somebody asks me, why is it, a bank's hierarchy is so stiff? Because if you look at FSA, the people that will go to jail will not be you, would be the C-suites and the board members. And that's why it is very crucial for all of us to come to the table and understand how this works. Yeah. So, okay, any questions? Oh, I forgot to say this. By the way, Bill Gates said this in 1970s, and he said this in 1972, and it's so real right now. Okay, I mean, that's my last slide.
Thank you, Rajate. Very insightful, good advice. And I think after this, I probably need to retract my CV, sent into any of the 5. I think I belong slightly closer to the old fart section. So it's quite difficult. It's a paradigm shift. It's a different way of thinking. There's a saying, oh, are you trying to put the cart before the horse? And I think that's what digital banks are doing, right? So yeah, I'll leave the young guns to it. So getting down to the questions, we've got a couple interesting ones. So I'll read them out. And these, I can't identify them, but if this was your question, I do welcome you to add on. Benny, this is your chance to speak one-on-one with Rajate. So the first question is this. I think it pertains to our regulator. It says, in other countries with strong fintech ecosystems, we see open banking and a framework which encourages sharing of customer data. This is as to what you just mentioned 2 slides ago. What about our Malaysian regulators? How ready are them in terms of allowing all this to happen?
Well, actually, our regulators are very welcoming. The ones that aren't welcoming are the players themselves. So Bank Negara actually has a set of guidelines already on open banking. Because I can say this, MBank today is the only local bank that has exposed our APIs for other people to consume. And this has made certain kind of business readily available to me. But I always wondered why nobody wanted to do it. I'm not quite sure why. So perhaps there is some concern or fear, because I experienced that too. It took me a long time to get internal approvals to do this. So, I mean, so it is not a regulatory thing. It is more of an industry thing, whether our industries are ready and whether we have people to push it. So remember I said to you, the multi-generational workforce, you just have to kind of push it. It took me, I think, 2 years to get it through. So my first customer was Rakuten. So before this, Rakuten is an online stockbroking company. So they have no branches. So if you want to open an account, you have to do it online. So it used to take like a few days because you put in all your information, then they will have to find a way to validate you. But upon consuming our APIs, they can do it instantaneously. So you can Google about it, because I know the MD of Rakuten said that he increased his customer onboarding from 20 a day to 2,000 a day, because all it did was pay your name, your IC, consume. Oh yeah, she is who she says she is, and she has a Maybank account, and yes, money can be transacted through that. And we have since done so many things with these APIs. We've done payment APIs. And yes, there's a lot more sharing, and not just open banking is not just on APIs. I mean, if you're talking about using blockchain technology, using ledgers that we can share information on would be great. We can do smart contracts. If you're a banker, you know what I mean, for bank guarantees, for BAs. You can really cut out all that manual and paper stuff. Why haven't we done it? Well, I tried 7 years ago. I set up a committee to do trade using blockchain. I didn't get very much response. So I'm hoping that, you guys, eventually one day you will come into management and that you will make that change. In the meantime, maybe you can just nudge your bosses. And how I would advise is do things bite sizes. So everything I have done and am doing today that is new, I've always had to do it in bite size. Some things I have to put it in my own internal sandbox, because people are nervous, right? Rightfully, because they've never seen it before. And but don't give up. You do small sizes. If it looks like it can be done, then you can commercialize it like we have done with the APIs.
Great. Okay. Looks like we still got a long way to go. But never mind, we march on.
Yes.
Next question. What is the state of decentralized finance in Malaysia? Are we seeing products such as lending utilizing this tech in Malaysia over the next 5 to 10 years?
Okay, so that came to my blockchain comment.
Yeah.
Was the whole use of DLT. The whole use of distributed ledger technology will help us do many things. In particular, I feel for trade and micro SMEs. Because right now, for those of you working in the bank, you know, right, it still takes sometimes for LCs 3 to 5 days if it's cross-border. So if you do this, it can be instantaneous. Where we are, unfortunately, in Malaysia, we haven't gone very far at all. Some markets have moved very far. Some banks, in particular, like JP Morgan, they actually have their own coins. They trade, I mean, they transact using, you know, the proprietary coins. Actually, our regulators are very open about this. The fact that our regulators have issued, you know, 5 digital banking license, which has provided a very different landscape and a very different framework. The fact that these digital banks will be born in the cloud is something we have, you know, the traditional banks don't do. The fact that they can do things entirely remotely, KYC remotely, no physical touch points. So, you know, from that perspective, our regulators so far, I mean, my experience is everything new that I wanted to do, I of course have to present to them. And if they see, you know, the merit of it, they've always been supportive. So.
Great, thank you. There's a question here. It says, one of the primary advantage of commercial bank license is the ability to fund via CASA, right? But now you've got the likes of Boost and Grab coming into the Malaysian landscape, and they've got all the e-wallets, right? So would this be a totally different model that they'll be looking to work with? And how sticky would these e-wallet balances would be if you compare to a traditional deposit product?
Okay, once they become a bank, they will be governed by the FSA. So they will function no differently than a conventional bank from the process of funding and lending. So they have to take in deposits for them to lend. So I would think maybe most of them that already have wallet probably want to convert those wallets into bank accounts. How sticky would be would depend on the behavior and also how compelling their pitch will be. So let's take Grab lah. Currently, you already have that Grab app, and then you have your Grab wallet. And then you do so many things on your Grab. Like I say, you know, you probably look at Grab 2-3 times in a day that you don't do with your mobile banking app. But now you can also do banking. Over time, I don't know, you know, the behavior may be, I might as well put my salary account in Grab lah, because I can still get interest, I can still invest, but over and above that, I can do 1,000,001 things. So the test that we've seen in some markets will, and the thing is, there's no single model. What Malaysia is doing is truly, I would say, quite revolutionary as well, giving these licenses to completely to existing entities that have got very deep consumer engagement, but not banks. You see, unlike Monzo and unlike Revolut, they start from ground zero. They had nothing before this. Whereas here you have, you know, you have Grab, you have Boost, you have Shopee, you have Aeon. They actually have very deep customer engagement already. So the stickiness will depend on how they interact, I think, with their customers. Of course, yet to see. Let's have this chat again a year from now or 2 years from now and see whether some of you would have moved and migrated your operating account to any one of them.
So the proposition for a digital bank obviously is very different, because we've got a question in the chat box, which you can see as well, giving a comparison between digital banks from like e-wallet, which is like a current account, and your Grab, the buy now, pay later, which is out of a micro loan, right? So would this differ differently apart from what you mentioned about customer experience? Because at the end of the day, I think it's still a money-making organization looking to cash in on net interest income, which is the same business model as a traditional bank.
Yes. Except there's one thing that I noticed is they don't want to do the unprofitable business, Pei. So I don't think they want to go into long-term assets like mortgages. I think they're looking at short-term because their funding would be short as well. And largely they'll be looking. So when you look at, like micro entrepreneurs, short working capital cycles, very short, like the food truck guy, right? So that's. And then, of course, there's also the cash part. They also want to make money, the net interest income from the money, but they also want to do a lot of fee business. So let me just share with you, for those of you who don't know, that today, remittance business is not controlled by the banks anymore. The banks have pathetically owned less than 10% of the total outbound business. The biggest guy in control now is merchant trade. 40% of the market is merchant trade. Then there's RIA, and then there's Dan Line. That is the business that we should not have lost. Why? Because that business is extremely lucrative. It is not capital intensive at all. So they're not just after NII, Pei Ling, they're after NOII, which is a non-interest income side of the business. And the fee side of the business does not require that kind of capital, right? And transactional fees, all this don't need capital. I want to answer Alan's question on Pinjam Go. So I cannot comment on the rates, but the thing is about TNG e-wallet again, is because they found that they have a lot of customers, and then the fact that they're lending is because there has been customers who have not been served by the banks, and that's why they have come in to fill the gap. Of course, their cost of funds would be high, because I guess the reason why they have to impose high interest rates is because they also have to borrow for them to lend, possibly, I don't know. But once you're a bank, then your behavior will be different. Your funding costs will be different, because you'll be looking at deposits. I mean, Pei Ling is the expert on this, of course, but so yeah.
Okay, so we are now at 7:02.
I'm happy to take one last question.
Okay, great. So you regret for saying this, because I've just got a personal message, and it's a rather I would say it's an interesting question. Yeah. So it says, industry news says that Rajate, you will be helming one of the new digibank. Do you have any comments on this?
Rumors are plenty. I'm not surprised why people ask me this, because I've been a huge proponent, right, Pei Ling, for the longest time. And I think everybody would assume that, I would helm one of these. But, well, at present, I am running a very big business here. And what I'm trying to do is to make sure that I remain relevant in the face of the digital banks. So I'm afraid, but the other thing I wanted to say is that I want us to, for those in the conventional banks, to not react adversely to the digital banks. I think is a great evolution for Malaysia as a whole. And then the best thing about being, I don't know, third world country or emerging market, you can always copy paste. You don't have to be the first person to think about it, right? But I just want all of you to remember that you need to make changes to the way you have been doing your business. And particularly if you're in your 20s or in your early 30s, don't find yourself getting sucked into the ways that we have always been doing. And the other businesses, on another day, I would tell you some of the new businesses that we have built, which with that whole approach of, just because no one has done it doesn't mean we shouldn't do it or it cannot be done, right? So the next time you go to Costa Cafe, the entire payment solution is using our payment API. If you walk into a gas station and you see a Costa Express, the kiosk, the payment QR is also done by us in collaboration with Sonic Boom, with another fintech platform. So my point is that we couldn't do it our own, and they needed us, and we came. So every time you go buy the coffee, you must remember this was a collaboration. So collaboration is key. Well, okay, guys, it's been wonderful having you guys. Maybe one day we'll catch each other in person. Thank you again for having me. Thank you, Pei Ling.
Thank you, Rajate. I'll pass it back to Sydney.
Okay. We at CFA Society Malaysia would like to once again thank you, Rajati, for your valuable time. Your insight to the digital space, banking space has truly been inspiring and definitely an eye-opener for us young ones to the very old farts. We come to the very end of our masterclass session today, and before we part our ways, I would like to share with all of you of our upcoming events in view of the membership renewal period currently. We have many exciting events like our Python Workshop 101, Duran Party, KL Tower International Towerthon, our FinTech Month in August, among many more. Please stay tuned at our social media platforms as well as our newsletters for this. We thank all of you once again for this evening, and we hope to see all of you at our next event. See ya.